Now we have a couple days, Jill, where Sam Bankman-Fried talked about most of the deleveraging taking place. Novogratz echoes that today. You think it's true?
I think that's absolutely true, but I think the question is not whether most of the deleveraging has taken place, but what will be the catalysts from here for the market to rebound and take back off. And that, I think, while we may have reached the bottom in terms of deleveraging, I think that we very much still have that as an open question. And personally, I think it's going to be a long grind back out.
John, do you think in the course of that long grind, we wind up with some systemic blowups? Is Three Arrows meaningful in your view?
Yeah, I think Three Arrows is certainly meaningful, and there's a lot of contagion risk stemming from that. I think over the next 3 to 4 weeks, it's pretty critical here to see if that contagion risk can be contained, if new capital that's come into the system, if it can buffer some of those companies, or if we're going to have another kind of Voyager type situation here. So I think the next 3 to 4 weeks are pretty critical. I think a lot of the concerns as we drag on further, those contagion risks become more and more mitigated as it's more and more contained. So I do think over the longer term, you certainly could be in a situation where you're starting to get close to that bottom. But the next 3 to 4 weeks here, I do think are going to be pretty important.
Yeah, Jill, on that same subject, those of us who've been around for a long time perhaps shouldn't have been surprised that there was leverage on leverage on leverage. And yet even Mike Novogratz, who I would include in that group, have been around for a while, seems surprised. Do you think we're done similarly with this contagion? Is there still a lack of transparency that's going to surprise us as we continue to unwind here?
Yeah, I mean, I think as was just said, the next 3 to 4 weeks will be critical in terms of what else shakes out. But I do think that this period has proven to be the critical moment of that shakeout. You know, as you say, I think that this has caught the industry a little bit too much by surprise. I think that it's not lost on many of us in the industry that here Bitcoin was created post 2008, you know, in the wake of all of the financial contagion over leveraging happening then, and it was created somewhat as a response to that. And here we've kind of recreated that as an industry. But I do also think that it's worth mentioning and noting that most of that contagion, most of that over-leveraging has happened within centralized financial institutions operating around the industry, not within the decentralized financial protocols, which have, by and large, at least amongst the blue chips in that area, have withstood the battering that the markets have given them over the last several weeks.
Yeah. John, Jill talked about a catalyst. Does a recapitalized industry sort of provide that kind of a catalyst? And how long is that process going to take?
It would. I think it would, but that's going to take a little bit of time, right? I think that retail investor appetite, we've certainly seen a lot of that come out. I think that could even go a little bit lower, prices go lower. You also have a more challenging macro backdrop now than you did last cycle, 2017-18. So it might take a little bit more of a time, but I think, you know, over the next 3 months, 6 months, you could start to see some catalysts emerge, and you could see some of that capital start to prop things up and get things going again. But I think certainly over the next month or so, we have retail appetites really come out a lot from crypto, and it's going to take a little bit of time to regain that.
Shepard Smith here. Thanks for watching CNBC on YouTube.